Everyone, welcome to Accounting Expo. Today we shall be looking at source documents. As you all know, one of the major reasons why we keep record of business transaction is to prevent fraudulent activities. And one of the ways through which fraudulent activities are prevented is through these source documents, through writing source document. So what is source document? Source document is a written evidence that proves that a particular transaction are taking place. So entries into the books of accounts are made through the usage of source document. Now, the first source document we are going to look at is the receipt. What is receipt? Receipt is an evidence of cash payment. That is, receipt is a document sent by the seller, issued by the seller to the buyer whenever the buyer pays money for the goods he or she had bought. And receipt is a source document for cash book, which is used to record all cash transactions. The next source document we are looking at is invoice. Invoice is a source document for credit transaction. The invoice is issued by the seller to the buyer, indicating the quantity of the goods bought. The second source document we are looking at is the invoice. Invoice is a source document issued by the seller to the buyer whenever they buy on credit. The invoice contains the quantity of the goods sold to the buyer. It contains the unit price and the total price of the goods sold. It contains the terms of payment and unlike the pro forma invoice that is issued by the seller to the buyer whenever the buyer wants front payment for the goods sold to the seller. Another source document we are looking at is the deposit slip or pay-in slip. The deposit slip is a source document written whenever an account holder wants to pay money or check into his account. Debit note. Debit note is a source document equally issued by the seller to the buyer to correct an undercharge. That is, when the amount written on the invoice is below the actual amount at which the goods were sold to him or her. So debit note is used to increase the indebtedness of the buyer to the seller. Credit note is issued by the seller to the buyer whenever there is a need to reduce the indebtedness of the buyer. Is issued by the seller to the buyer to correct an overcharge on the buyer's invoice, on the invoice given to the buyer. So it is given to the buyer whenever there is an overcharge in the amount written in the invoice. Petty cash voucher. Petty cash voucher is a voucher that gives authority to the petty cashier to disburse money for expenses whose amount are small in nature. Check stop. Check itself is an instrument. Check leave is a written order given to the bank to pay a named person. The check stop is the small part. It is used as a source document by the current account holder who issues check to a named payee. So, statement of account. Statement of account is a document issued by the seller to the buyer to either on monthly basis, quarterly basis, or periodically, in order to show the debtor how much how much he or she is owing the organization. It has column for date, details, which is also known as particulars, debit, credit and balance. The debit side of the statement of account contains the amount. Whenever there is an increase in the amount the debtor is owing the seller, it will be recorded on the debit side, while the credit side contains reduction in the balance that the buyer is owing the seller. Thank you and God bless you.